All right. Welcome back to the channel, everyone, and thank you for tuning in to another great video. Let's talk about high probability supply and demand zones because I get a lot of inquiries or questions, I guess due to frustration of people trying to depict which zones are good ones, which ones are bad ones. I've covered this in many topics or many videos, I should say. You just have to take the time to go in and watch the videos, guys, and even on some of the trade breakdowns, I talk about, being able to determine what's a high probability zone and what is not. Now, I will say this: one of the major pieces of advice or tip that I could give you when trying to really identify a zone that really makes sense or screams that it is could possibly be a higher probability zone is the fact is is there a imbalance or gap resting back at the zone? Okay, primarily a gap. Okay, meaning that zone is untested. Okay, but one of the first and foremost biggest key points that you really need to pay close attention to is market structure. It is the most important element to trading, and if you do not understand market structure, simply being the movement of the market as it's either trending up or pushing up, making higher highs, or reversing, making higher highs and higher lows. Higher lows and lower lows as it's moving to the downside. Because the market it has its ebbs and flows. It's going to move up, push up for a period of time. It may hit some major area of resistance, turn, fold, and then start to reverse and push to the downside. So you have to be able to read just as you pick up a book and able to comprehend what's going on with the storyline of the material within that book. The same thing on the charts. The charts are the same thing. We have to tune into these charts, look at them visually, and be able to decipher what is ultimately going on. Is the market, is it moving higher? If it's moving higher or is trending into one direction, then we want to be looking for key areas of demand to take continuation trades going higher, vice versa if the market is moving to the downside. Now, again, one of the key points or tips I can give you when really looking for a zone, okay, first and foremost, number one is depicting what is the overall direction of the market. The market's moving higher, then trade in that direction and looking for the demand zones, meaning areas of aggressive buy-in to the upside, okay, on pullbacks. That's the key and part of the strategy in which I talk about throughout all the videos: supply and demand, supply and demand, supply and demand, what to really focus in on. And I talk about, if you're a new trader, to focus on moving and taking trades off your lower time frame in the direction of the higher time frame, okay? And that is trading if the market's moving higher, trade pullbacks, retracements, okay, to areas of demand as the market is moving higher, okay? Now, the sign of the market turning its tide is going to be a break of structure in the opposite direction on the higher time frame. I'm going to say that in relation to the higher time frame because if you're someone that's new watching this, a new trader that's watching this video for the first time, and maybe you're really starting your journey into learning how to trade and possibly trading supply and demand as a strategy and using it in your trading, then trade in the direction of the higher time frame. Okay, yes, lots of times I'll trade what most people or traders would say counter trend trading against the overall direction of the higher time frame. Okay, now yes, I do that because I have more experience and I'm looking at quick scalps. Okay, because I scalp. I'm not a position or swing trader, so I'm looking for quick opportunities to be able to engage in the market off my lower time frames. Now, I talk about confluence, and I'll say this time and time again, and I will continue saying it. The more confluence you have resting on your side, the better off you're going to be in taking a trade that works out in your favor. So please take heed to that. Trade in the direction of the higher time frame if you're someone that's starting out, okay? All right, because you're going to see your trading unfold very quickly, in a sense of you're going to start taking more positive trades that are going to be more profitable and work out in your favor, okay? Please do not try to counter trend trade against the overall grain of the market, okay? Don't try to derail a moving train that is headed on a path, okay? all right, a certain path, because then you'll be moving in that same direction and there will be a collision head on, all right? Do not try to do that, all right? Trade with the direction of the market. That's what's going to work out in your favor. So I want to talk about in this video here, I know I'm rambling on, but I wanted to talk about one of the key factors in looking at and determining a high probability is, first of all, number one, what is the market structure? What does the structure of the market look like? Is it moving to the upside, making higher highs and higher lows? Okay. All right. Two, do we continuously get breaks of structures to the upside? All right. Okay. And sometimes you do not, if we're trending to the upside, it doesn't always have to be about a break of structure. It could be a key area of aggressive buying to the upside, okay, which could just pull back and retrace back to a key area of demand. All right. Now, number two, if there is a turning tide or shift in the market, the first thing you're going to notice is a break of structure in the opposite direction, primarily off the higher time frame, because that's what we're talking about. It's trading in the direction of the higher time frame. So if the market shifts its tide from one direction to the other, if we're moving up, then look for that break of structure to the downside off the higher time frame, okay? And then trade on your lower time frame charts in the direction, all right, of what's going on in the higher time frame. So if we shifted, broke structure now in the opposite direction from moving high to now breaking structure to the downside, then we want to start trading short on pullbacks to key areas or retracements to key areas of supply. Okay, that's aggressive selling. And you want to continue making trades on retracements or pullbacks to key areas of supply just as long as the higher time frame is still moving in that same direction. Okay, all right. So again, trade in the direction of what is going on your higher time frame. All right. Yes, so many traders, what I see take place is that they're just constantly wanting to get into a trade. And the biggest thing about trading, the most important part about trading is you have to have patience. If you're someone that is very irrational and feel like you need to be always into a trade, that's how you're blowing your account, okay? Because you're not taking heed to what's overall going on and waiting for the best setups, okay? So one, market structure. Trade in the direction of what's going on in the market, all right? Is it bullish or bearish? Two, the turning tide is going to be a break of structure in the opposite direction, all right? And trade in that same direction on, again, with the higher time frame, okay? Three, basically looking for retracements or pullbacks, okay? It's part of the strategy. I'm giving you this rundown of what I look for when I'm looking for my entries, primarily when I'm looking to, ultimately when I'm looking to trade in the direction of the higher time frame, okay? All right? And number four, it's all about the rejection then, okay? Once we have done and follow all the steps or the parts of, what to identify as part of the strategy, and ultimately trying to figure out what is the overall direction, and then looking for trades in the direction of the higher time frame, the retracements to either supply or demand, okay? Then we're looking for rejection to take place in that fourth part or step to be able to take our trade. All right, do not jump into the trade just because price pulls back to, okay, let's say the market is bearish, it pulls back to supply, and you just boom, jump into a trade. You have to look for rejection because you should know by now that if price taps into whatever zone, a demand or a supply zone, it could break right through that area and want to test a different area. Okay, we do not have the power to really determine or the foresight to really determine what's going to happen when price gets back to a zone, okay? Because we do not have the money as retail traders to trade against a moving train, okay? We have to be able to trade with the banks and institutions and understand what they're doing. And that's what the purpose of the charts are. The purpose is to give you a visual representation to be able to decipher and very, very much so analyze what's going on in the markets, okay? So fourth, look for some type of rejection. All right. And I talk about rejection in multiple videos, whether it is price wicking out on an area, forming an M or W structure, just as well as looking for a break of a candle in the opposite direction. There are so many different means of looking for signs of rejection that you have to really determine what works best for you in your own trading. Okay. And I'll say just fifthly, number five, people always ask, what do I target or what are my areas of what I'm looking for? Primary areas of liquidity or the low of high of an area where prices pull back to. So if I'm looking at, say, for instance, I took this short right here, which I posted today on the Discord community off the ES futures, what did I do? Well, I looked for an opportunity to go short because this was a supply area right here, okay? Aggressive selling to the downside, and we just as well, I believe we had broke an area of structure. Yes, we have broke structure here and right here as well. So price was pushing lower, pulling back, breaking structure to the downside. So it was basically, you know, we got the continuation of the market moving lower, making lower lows and lower high. Now this is looking at my lower time frame, just as well as the higher time frame. We were bearish as well. So when I'm looking at my lower time frame and I see continuations of breaker structures to the downside, I'm just looking for a pullback to a key area of supply to take the trade in the same direction going south, you know, going short. All right, back down to the low. There were some areas of liquidity right here, you know, similar lows right here, and I was looking for price to kind of run down there and take those areas out. But we have this low here too, so you gotta be mindful of that low resting right there, because price can come down here and test that low and then reject, right? So I was just looking for supply entry from here, okay, to go short, back down to the low, okay? Capitalize that on that trade and took profit. I posted that again on the Discord. So if you're interested in joining the Discord and seeing trades like that, come over and join us. Find the link down in the description portion of the video and invite yourself in. Anybody is free of charge, okay? So there's a channel on the Discord called the Trading Floor, and that's where we as traders come together during the opening of the US session primarily, and we post entries or screenshots of our trades to fellow members or to the community, so you can get a idea of the trades that we're actually taking. So again, if you want to join the Discord, find that link down in the description portion of the video. But I just want to talk about today, you know, how to go about finding the best entries, okay? And you have to trade at zones that make sense. Just don't be trying to trade every area on your chart, because it may not be a high probability supply or demand zone. All right, and one of the biggest telltale signs of a supply or high probability supply demand zone is going to be, is there a gap resting back at that zone, whether supply or demand, and that zone was where it was untested as well. Okay, meaning we're moving in direction, taking trades based on what's overall. Is the market bullish? Okay, we're looking for opportunities, key points of pullbacks to demand zones that have or are untested, meaning they have not tested that zone. Price has shot up from that area, aggressive force to the upside, then pulls back to that key area of demand, and we're looking to go long. Same thing here. This was this was a supply zone, aggressive selling to the downside, retracement. We're already bearish, okay, and the market pulls back to this key area of supply, aggressive force to the downside, lots of selling. All right, it gets to that area. I pretty much get into the trade here with the breaker structure. Not breaker structure. A break of the candle in opposite direction. Okay, so this last bullish up candle, I look for the turn of a bearish candle to form and break below, and I'm going short to the downsides. Okay, so those are things we look for. Trade in the direction of what is going on overall. Just don't be trading every key area of supply and demand. Just because price is pulling back to a key area of supply, but the market could be bullish, and you're trying to trade against the market. You're trying to take a trade at a supply zone, and the market is bullish, okay? Now, I'm not saying it won't work out. Yeah, because again, that is counter trend trading, and the lower time frame may be trending to the downside, but the higher time frame is the overall, it is the most important thing to really be trying to take your trades in that direction of. So again, bringing all the confluence together. Higher time frame, bullish. Lower time frames, bullish. Looking for demand zones, boom. That's going to work in your favor. Vice versa. Okay, the higher time frame is bearish. Lower time frames are bearish. I'm looking for retracements back to key areas of supply. All right, they go short. So just take heed of that information, guys. Because lots of individuals who have listened to what I've said and follow the videos and follow the strategy of how I trade, have slowly started to understood, oh, okay, I understand now, and have turned their own trading around, okay? So, you know, but I'm not here to tell anyone how to trade, all right? I'm just showing you how I trade and sharing with you how I trade in the videos. But I just wanted to touch base on, you know, trying to find the best opportunities or zones to trade for when it comes to high probability setups. Those 1, 2, 3, 4, 5 things I talked about earlier in the video, take heed to those things. Pay attention to those things, okay? And again, one of the most important parts is there a gap, okay? Is there a gap or an imbalance resting back at the area of supply or demand? If price has not tested that zone, and there again, it's going to be more so a high probability zone. Wait for price to get back to it, and do not just take the trade the moment price taps right into it. Wait for the rejection to take the opportunity, but also be mindful of price action, what took place as price was retracing back to a zone, okay? Because there may be some stopping point, there may be some area of support right underneath that zone, or area of or resistance right above that zone, okay? So just be careful about that. But that's all I want to talk about today. Again, I took a trade here today off of the ES. It was a short entry right here, just for a quick entry to go short. Picked up 7 points right there on that trade there. And you know, here, just to show you right now, there is also an opportunity. There's a supply zone resting right here, okay? But we gotta be mindful, because this area right here, if price breaks this through this zone, this area right here, then it's breaking structure to the upside, okay? All right, so if it's breaking structure to the upside on a lower time frame, then we have the supply zone right here. I'm not saying you can't take that trade, but you gotta be, again, I just talked about this, being mindful of what's below you once price breaks structure, okay? Takes out an area, and then it taps into a supply zone above it. There's going to be support right below it, okay? So you have to be mindful that price could come up here, test this area, reject it, okay, right above this high volume area at the supply zone, but then we have a supply right below. So the opportunity of taking a short trade can be very, very short-lived, all right? So I'm just talking to you guys today about being mindful, looking for the best opportunities, and how to find the best zones, what to really, you know, pay close attention to, all right? And again, I want to reinforce trading in the direction of the higher time frame to all those new traders and beginner traders out there that are struggling in their trading and not knowing what to really do. You know, you're frustrated. You just don't know which trades to take or which zones to take. Trade with the higher time frame, all right? Multiple means of confluence, using paired charts. If you're using a 60-minute chart, I don't trade time-based charts, but let's say you're looking at an hour chart, all right? You're tapping to a supply zone off that time frame chart, okay? All right? Which means we're already bearish on the higher time frame. Then trade on the lower time frames in the direction, okay, of the higher time frame. Look for opportunities to go short. Do not trade into a higher time frame supply zone trying to go long. It's not going to work, okay? You are trying to push a brick wall that's not going to move, okay? Because most times when price taps into a higher time frame supply zone, it could be a demand zone, okay? All right, that's untested, all right? There's a gap there at that supply zone. Look, price is going to reject that area, okay? So be smart and trade going short, looking for opportunities to go short when the higher time frame is telling you that hey, we're at a major stopping point to where this wall right now is just not going to be taken down. The market is going to want to try to trade in that direction of going south until it proves itself any different, okay? So look for those opportunities. So basically just trade what you see, trade what makes sense. The charts are there for a reason. They are to give you basically a roadmap. It's a GPS in a sense. What you see going on in your charts, what you really need to pay close attention to, and lots of traders have a hard time. And I talk about this. The thing they struggle with the most is market structure, and you're not going to be successful until you figure out how to really correctly read your charts and follow market structure. I'll leave it like that. That's all I have to talk about today. But I just wanted to talk about those couple of things, those, you know, the 5 parts or 5 steps, whatever the case is, the things to really look for and to identify when trading, so that you don't try to, you know, so that do not get railroad, because it is the goal of these banks and institutions to stop traders out by any means. They're always setting traps up, okay? So just be very mindful of what's going on. Again, if you're interested in joining the Discord, find that link down in the description portion of the video. If you are someone that's interested in joining the Elite membership, people are always asking me this. All you have to do is click on the join button. It's a link, a button somewhere here on the YouTube channel. I need to take a look at the channel myself to kind of identify where it rests at. But it's join, Join. If you click on that, you'll see 2 tiers pop up: the elite membership or elite channel membership. It's for those individuals that are really interested in really getting a fine tuning and in-depth understanding in the way that I actually trade, because I have tons of videos on there where I talk about my trade breakdowns. So it's as if you're kind of basically watching me virtually or sitting down with me, kind of side by side, and I give you the rundown of my trades, what I was thinking leading up to the trade and into the trade, as well as you get that hand selected video playlist of videos, so you don't have to sit there and watch over 500 videos. I've hand selected videos that I think that are feel as if they are the most pertinent videos or most important videos to really give you an edge into the way that I actually trade. You just have to spend time watching the videos, rewatching them, taking notes. It doesn't happen overnight, so just take your time and kind of thumb through them and watch them one by one if you're interested in joining the elite membership. Price wise, $6.99 a month. Again, price wise, $6.99 a month. Price of a cup of coffee. Okay, so it's up to you to decide if you want to spend $6 or $7 a month. A month, we're not talking about a day, a week, we're talking about monthly, $6.99, to really kind of understand the way I trade. I'm not telling you that you have to. You don't have to trade like me at all, but you will find that there are traders that are part of our Discord community that have joined and are doing very well themselves. I'll leave it like that. And it's up to you to find out. You can come over to the Discord and ask some of the traders or community members that are there, and they will tell you themselves. I'll let them speak for themselves. Anyways, that's all I have for you guys today. I appreciate it. Please do me a favor. If you're not a subscriber to the channel already, take the time to go ahead and sub by clicking on the subscribe button down below. Make sure to turn your post notifications on. That's simply clicking on that bell next to the sub button, so that you never miss one of the uploads here on the channel. Okay, and do me the most important favor of all: drop a like on the video. I will see everyone in the next video. I am done for today trading. I took one trade on the NASDAQ and then one on the ES. And unless I see something else unfold, we are breaking higher now. Looks like probably going to tap into the supply zone right here. But again, I'm going to be mindful of what took place here, because we just broke structure here to the upside. Okay, so I'm not saying this cannot be a pullback here for the market to run lower, meaning a deeper retracement to push lower. But we'll see what happens when the market taps into that zone. Other than that, I appreciate everyone tuning in, and I'll see you guys in the next video. If you're trading, like I always say, please be safe in the markets and try your best to be green. All right, meaning being green means to actually have profitable trades. Be patient and wait for the trades to unfold. Take care.